Hello and welcome to the first chapter of Principles of Tax FA 2019. Now the first thing you're going to say to me is, that says FA 2019, I want to take my exams in 2020. FA stands for Finance Act 2019, and that Finance Act from 2019 is the act that is examined 1 year later in your exams in year 2020. So you are doing exactly the right course if you're looking to take exams during the calendar year of 2020. Now, the first thing we look at within this textbook, within this area of the syllabus, is ethics. You need to have a keen understanding of ethics, and I appreciate that you may have done some of this ethical stuff already within the assurance paper primarily, and a couple of other bits and pieces in other papers, but I will go through it again just to make sure you haven't forgot anything, because this is critical to us as professionals. Now, it is absolutely essential that you understand that the ICAEW has a code of ethics. This code of ethics gives us 5 fundamental principles that we must always adhere to. And we're going to go through these 5 fundamental principles in a little bit of detail. First thing I would say is, here's a multi-choice question. So what I'll do is I'll say, which of the following is not a core fundamental principle? And I'll give you some other random things, such as being correct. So maybe acting in a lawful fashion, that'd be pretty important to me anyway, to be honest, if it's part of the professional behaviour. So there's various different ways of potentially asking this as a multi-choice question, so do be very, very careful with it. Now, the first fundamental principle we're going to look at will be integrity. Now, integrity is all about being straightforward, it's about being honest in all of your professional and business relationships. The code that we have, our code of ethics, only applies to business relationships. However, it will become so completely ingrained in you, it'll become part of your normal persona. So you will find that you'll become very straightforward and honest in all of your dealings. In addition to that, and it sort of falls out from this quite nicely, objectivity, no bias. So I'm not going to say that you should potentially use advice to force somebody to go down one specific route because you like that route or not. You're not allowed to have any elements of bias. You're not supposed to have any elements of conflict. And this will include personal conflict. So there's no bias allowed and no personal conflict. And to illustrate this point, what we have is a worked example. Now, what happens is these worked examples will be highlighted in this like dirty orange color. And what will happen is we'll actually go through the worked examples from the study text so you can see exactly what we're talking about. Every now and again, we come across an interactive question. They'll be highlighted in a nice bright red, which makes them really angry and jump out at you. When we come to interactive questions, I'd suggest that you stop the recording, read through the interactive question by yourself, then restart the recording. We'll go through it together, but you'll know what I'm talking about, and I'll take you through how to find an answer. So with the worked examples, we tend to go through the study manual, the study text together, and what we have is the first worked example called objectivity on page number 4. And what this says is, Aisha is a professional accountant working on the corporation tax return of Lever Limited. The finance director, which is our FD, the finance director of the company has made it clear that she expects the company's tax payable to be less than £50,000 and that she doesn't care what Aisha has to do to make this happen. Does Aisha need to resign from this engagement? Well, she doesn't need to resign yet, but she does need to make sure that the fundamental principles of integrity, being straightforward and honest, and objective, i.e. no bias or conflict with anybody, will not be breached in any way at all. So she only needs to resign if she feels that the FD is trying to unduly influence her professional judgment and impact upon her integrity and objectivity. If she feels that she can still be straightforward and honest and say, no, I'm sorry, it's going to be £60,000, and there's no bias or conflict by saying, I'm sorry, it's £60,000, you have to pay that amount, that's the lawful amount you need to pay, then she should be fine. However, if the FD were to push it, then that now becomes a different style of example. And we'll come to those styles of examples a little bit later on. The next principle we're going to look at is going to be professional competence and due care. And professional competence and due care is all about maintaining professional knowledge and skill at the level required to make sure that the client receives the right type of advice. So we're trying to ensure that we remain competent in our areas of specialization. So we're trying to make sure that the advice we give will be pertinent, so it'll be appropriate, and it will be the right technical advice, the right professional advice, and it will apply with technical and any other type of applicable technical and professional standards. So we need to make sure that we keep up to speed with all new best business practice, We need to make sure that we keep up to speed with all of the new technical issues, and we do this type of thing through continuing professional development. So you have a certain level of exams you need to pass and a certain level of experience before you're allowed to join our club at the Institute. Once you've done that, you still have to continually keep your learning up to date. Without it, you wouldn't be able to be professionally competent. In addition to that, if you were to move from one job to the next, you are not allowed to disclose information about your prior employment or your prior employer's clients. You're also not allowed to disclose any information about your current clients to somebody outside of the organisation. So you can't disclose any type of client information to anybody else. Also, you're not allowed to use any type of client information for your own gain. That means that you're coming into a conflict. That means you've got a self-interest threat which will potentially breach your objectivity. We don't like that idea. That's another one of our professional principles or our fundamental principles which will now be potentially breached. Now, to illustrate this, we have another worked example on page 5 called confidentiality. And here, Greg is a professional accountant who's recently changed employer. He's gone out for the evening with one of his new colleagues who's asking him whether he's ever worked for anyone famous and whether he knows how much they earn. In a previous job, Greg helped to prepare tax returns for a number of celebs. He's met with one particularly well-known entertainer who did not go on to engage the firm. He also got talking to a famous actor whom he appeared to sit next to on the flight and had a chit-chat with him about summer holidays and such. This is something that you will come across on a regular basis. You will deal with very high-profile individuals who lots of other individuals in the public will know about because they are very, very much in the public face. You can't talk to anybody else about anything you've done for any client. Your best way of dealing with this is don't say anything to anybody. So in this situation, the requirement says what information learned before he began his current job can Greg now potentially disclose to his colleagues. Notice his name's changed from Greg to George. Now what happens is Greg is bound by the fundamental principle of confidentiality. It basically means that Greg cannot talk to his current workmates and his current employer about anything which has happened at his previous job at all. Full stop. So if you wanted to actually encourage somebody to employ you, you could say, I've done this type of work for high-profile individuals, but you cannot say who they are because you're never allowed to disclose that level of detail. That would be in breach of our fundamental principle, which is confidentiality. In addition to that, we have this idea of professional behaviour. Professional behaviour means complying with laws, so you need to understand what the law is trying to say, and you also have to behave in accordance with applicable regulations. So you need to make sure that you act in a way that can never discredit the Institute. Even as a student, you're not allowed to act in a way which will discredit the Institute. We expect your level of behaviour to be better than most other people. We expect you to act in a very professional and courteous fashion. That means opening doors for old people, helping granny across the road, that type of thing. You will be expected to be a key part of society, and we expect you to act in that way. Some of the threats that we have to these key fundamental principles will include things such as self-interest. Self-interest can affect objectivity because if I have self-interest, that now means I can't be unbiased. I'm going to be biased towards me. Self-review can also have an impact on objectivity, can also have an impact on integrity because I'm not going to be honest and straightforward and say, you've made a mistake, you idiot, if it's me that's made the mistake. So self-review is something that you should never ever perform. Always get somebody else to review your work. Advocacy is the idea of trying to promote a specific position to such an extent that you actually end up becoming a manager of a different department or a different client. You don't want to do that. You want to be giving unbiased advice and then allow the client to make whatever decision they feel is appropriate. Familiarity is all about having close relationships with the clients or with a senior member of staff of the client, and then you become too sympathetic to that other person's interests. So you become too sympathetic because you've got a close relationship. And intimidation is when you may be encouraged not to exercise independent judgment, not to be objective and to demonstrate integrity, because somebody is going to try and force you to do something. The forcing you to do something is the intimidation. So this is when I say to you, you must do this way or I'm going to sack you. That's intimidation. If you feel that you're being asked to act in an unprofessional fashion, then you shouldn't do it. Now, there are various different safeguards to these threats which will allow you to be protected yourself and allow you to demonstrate the fact that you are doing things properly. such as education and training. The fact that I'm talking to you about acting in a professional and an ethical fashion, that now means that you know what I'm on about. Continuing professional development, even after you've qualified, this is an idea of lifelong learning. We have various different rules and regulations, which includes the corporate governance regime, which you will be expected to have an understanding of. And we'll come to that a little bit later on within your studies. Professional standards, these do not just include accounting and auditing standards, it's all professional standards, which will include professional regulation and monitoring from external sources, including the Institute. External reviews are a good way of ensuring that there's no self-review and no self-interest issues. When you come across an ethical problem, and I promise most of you will come across some sort of ethical problem, the things that you need to do, the things that you need to take into account must include all of these things. So you must include all relevant facts, the various different parties that are involved, the relationship between those different parties, identify the ethical issues that we have, and then try to identify which of the fundamental principles will potentially be affected and how you can remove that effect on your fundamental principles. There will be various different internal procedures that you can go through, such as maybe complaint resolution, maybe some sort of disciplinary or grievance procedure, and then there'll be other alternative courses of action, such as maybe discussing issues and coming up with some sort of resolution which is good for both parties, rather than just saying everything must be in one person's best interest, making sure that both parties get what they need. So that type of arbitration could be quite useful in there as well. Now we have another couple of interactive questions, and as I said before, as soon as these big bright red interactive questions come up, what I would suggest you do is stop the recording, read through the interactive question, then restart the recording and we can go through it together. Interactive question number 1 then, ethical conflict resolution, bottom of page 7. James is a member of the ICAEW, he's a tax manager working for a client who's a high profile charitable organisation. Over the years, he's become firm friends with one of the financial controller, Gordon. He's recently become concerned that refunds under the gift aid scheme, which we'll come to later on within your tax studies, have been claimed from HMRC without the correct documentation to back these up. James has mentioned this to Gordon, so I, as the tax manager, mentioned this to the financial controller. But he said to me, don't worry about it, it's all good. James doesn't want to upset Gordon, so I don't want to upset Gordon, but I'm still not overly happy. What can I potentially do? Well, what I need to do here is I need to identify the main threat to the 5 fundamental principles here, and then any type of 6 factors that can be considered by James when initiating any conflict resolution that might be required. Well, the types of familiarity threats that we've got here to start with, we've got a good close relationship with Gordon. This type of familiarity threat means that he may be able to unduly influence me. So I may have found something which is incorrect, but because he's my friend, I'm now encouraged not to get involved in it. Now, this is not intimidation because he's not forcing me to do it. He's just encouraging me to do it. When initiating any type of conflict resolution, I should take into account things such as the relevant facts, the various different relevant parties, how the relevant parties are related to each other, and this will include me as well, the issues involved, the fundamental principles related to this matter, and then any type of internal procedures that they have, and then alternative courses of action which may be appropriate as well. All of these things could be taken into account. Interactive question number 2, ethical conflict resolution. Remember, stop the recording, read through the question, come back and we'll go through it together. The same facts as before. After considering the 6 factors, James has decided to consult the finance director of the charity, Brenda. James feels that Brenda has not taken sufficient steps to resolve the issue. So we do feel that there is an issue now. We've spoken to our friend and the financial controller, his boss. Outline the options open to James. Well, what we can do to protect James here is, first and foremost, the Institute, the ICAEW, will try to protect you to some extent. What it will do is it will offer you advice. So we have an ethical hotline that you can get in touch with, and they will give you advice as to how to deal with certain issues without you having to actually tell them what the name of the client is or how this specific issue has come up. Everything is done from an anonymous perspective, which is brilliant. From a further down the line perspective, if you're still not comfortable, you could get some legal advice maybe on the ethical issues. You do have to be careful here when you're seeking external legal advice that legal privilege will apply, i.e. the legal advisor will not disclose anything about your client. So client confidentiality is a real issue here. James should also think about maybe getting formal legal advice to determine whether he needs to make any type of report, because you may find there may be an anti-money laundering issue in here, which we'll come to towards the end of this chapter. If the ethical conflict remains unresolved, then you may find I decide that I've had enough, I'm not comfortable with this, I'm now going to have to step down. And stepping down and resigning is quite a significant decision to be made by anybody in a professional capacity, because it now means that you've recognised that there's a problem, but you're now saying, I'm not now prepared to keep on receiving this fee income because I think something's wrong. And if that ever happens, it means there's a significant issue. Okay, let's keep on going. Other issues that we've got, other conflicts that we need to have an awareness of. One of the things that we do, one of the safeguards we have is we have internal processes and procedures to try and identify when we have these types of conflicts and try to make sure that they never occur. One of the things we'll do from an assurance perspective is have segregation of duties. So one person prepares the work, another person will then check it. So these types of procedures will ensure that you don't have that type of conflict. And we have a worked example which illustrates how this conflict can potentially work with worked example conflict down the bottom of page 8. A professional accountancy firm initiates a joint venture with a major competitor of one of its firms or one of the firm's tax clients. Who is the conflict between here and which fundamental principle may be threatened by this conflict? Well, the big issue is between us as the accountancy firm and our client. The person that we're going into business with is not the person that's got this conflict of interest, it's us. And you may find that there's a threat to objectivity here because it's going to be very, very difficult for me to act in an unbiased fashion. You may find there's going to be a self-interest issue in here. So this type of objectivity problem and a self-interest issue tend to go quite closely hand in hand. So this could be a real situation for me. Now, if you do have this type of conflict of interest, some of the things you can potentially do is you can actually notify the client that was involved. So in this worked example, the client who was involved, tell them that we've got this potential conflict of interest. Make sure that they're happy with it, because if they're not happy with it, then we may have to decide not to take it up. Self-interest is not sufficient justification to do something where it's not ethical. Notify any other relevant parties, such as the party who we're going into the joint venture with, so they know exactly what's going on, and then notify anybody else who's potentially important here. So being completely transparent and telling everybody everything which is going on, that's usually a very, very good way to get around any type of conflict of issues. In addition to that, one of the ways we can get around conflict of issue problems is with an engagement letter, because this will specifically state what we will do and what we won't do. So this type of engagement letter can be very powerful. It tells me what I am prepared to do and what I'm not prepared to do. Now, one of the last things we need to look at within this chapter is avoidance, evasion, and this will then lead on to money laundering issues. One of the things you need to have an awareness of is the difference between avoidance and evasion. This has got multi-choice question written all over it as well. Tax evasion is a crime. This is when you refuse to pay the appropriate amount of tax, either through not disclosing it or through potentially disclosing it in such a way that it's impossible to generate the right charge, or potentially by just saying, no, I'm not going to pay it. Tax evasion is a fiscal crime. It's the same as fraud, effectively. So that means it is illegal. If it is illegal, it means there's an anti-money laundering issue in here as well. Because from our anti-money laundering training, you will all know that if anybody commits any type of crime, including a fiscal crime, then that now means there's a potential money laundering issue. Tax avoidance, on the other hand, tax avoidance is fine. Tax avoidance is a legitimate way of using the tax rules and the tax legislation to reduce your tax charge. Some of the things you can do here will be things such as an individual savings account, which is an ISA. That's a tax efficient savings scheme. You can put in up to 20 grand a year into this type of ISA, and then the ISA's assets do not generate a charge to income tax or capital gains tax. That's brilliant. But that's a specific method of using the tax rules to reduce your tax charge. That's okay. We have no problem with that. You're completely legitimate with the way that you're using these tax rules here. The tax evasion, that's the bit we don't like. And some of the things that can be included within this type of evasion would include not telling HMRC what's going on, or potentially telling them something which is incorrect. If you were to find this out, you've got a potential ethical issue. You've also got a potential anti-money laundering issue as well. So you may find you have to make a report to your MLRO, your money laundering reporting officer. But we'll come to that in just a second. Evasion can potentially lead to various different penalties. If it's a minor offence, if you've just done something and it's incorrect, and maybe you've done it because you couldn't be bothered working it out properly, so it's a lack of competence rather than trying to deliberately mislead somebody, you may find you just get a slap on the wrist and a bit of a fine. However, you can end up with prison sentences. There are some significant figures throughout history who have gone to jail for tax offences, such as Al Capone. They couldn't get him on the gangster charges, so they sent him away based on tax evasion and fraud because they couldn't work out where his money came from. Okay, now from a money laundering perspective, we're focusing very heavily on the money laundering side now. The offences that you need to have an awareness of will include things such as assisting a client and then also not disclosing something when you become suspicious of it. So the fact that you don't have a legal obligation to make a disclosure, or you think you have a legal obligation and you just do nothing, that non-disclosure is sufficient. So doing nothing is not enough. If you come across something which is unusual, you have an obligation to make a disclosure. That disclosure will be an SAR, Suspicious Activity Report. And there are a few other mnemonics or a few little acronyms you need to have an awareness of, such as POCA, the Proceeds of Crime Act 2002, which has actually been amended by another act, and it's also been amended by the money laundering regulations. So we are continually evolving these rules and regulations. This is why even after you're qualified, you're still expected to keep up to date with these things, because it is continual lifelong learning that's important to us. The handbook that we have, our anti-money laundering handbook, will actually give us our CCAB guidance. The CCAB, as you'll know from your accounting studies, is the Consultative Committee of Accounting Bodies. There's all the big major accounting bodies coming together and they actually produce the anti-money laundering handbook and guidance to say, this is what we would normally expect you to do. Money laundering can normally come about with regard to criminal funds or terrorist funds, anything to do with any type of criminal activities, which will include tax fraud. Money laundering activities include concealment, disguising, or even just removing criminal property completely. I'm not going to go through the various different phases and layering and all the rest of it because I don't think that really works in the real world anymore. It also includes funds from fraud, bribery. So bribery is a big issue at the moment. You'll come across that later on within your studies. And failure to comply with a regulatory or a legislation-based requirement, which will include things such as you must tell the tax authorities how much tax you've got. A couple of other little breakdowns. You've got SAR, Suspicious Activity Report. NCA is a national crime agency. What happens is, if you have suspicion that something is going on, you make a Suspicious Activity Report, an SAR, to your MLRO, your money laundering reporting officer. The MLRO will then investigate it further, determine whether they agree with your suspicion, and then submit something off to the NCA. The NCA will keep a detail of everything, and they will get in touch with your MLRO and tell them that they've received the SAR, and they will say to them that they want you to continue to deal with this client and not to tell them what is going on. If anything else happens to that client, you must then tell the NCA what's happening. These types of disclosures can be quite nasty to determine whether we should make this disclosure or not. And the first thing I would say is the disclosure should be made if it's authorised by the client. However, if the client is performing any type of money laundering activities, they're not going to authorise the disclosure. Also, you don't want to tell them that you think it's suspicious, because that's a tipping off offence. If you have a situation whereby you have an obligation under law, such as per the POCA and the anti-money laundering regulations, then you must make the disclosure regardless. The disclosure will start off by being made internally to your MLRO, and then they will take it further. There's the classic cover your own backside here. You are much better to make too many disclosures than not enough. If you have an issue, go and have a chat with your MLRO and they will work out whether there is a real problem, and they will actually help you to identify problems in the future. MLRO and the entire compliance department are there to try and help you make sure you do the right things in the right way. So if you're ever unsure as to what to do at the first Christmas party when you're at work, is go along and buy your compliance department a beer, because they are the guys that are going to make sure you do not go to jail. The AML disclosure will be made by your MLRO to NCA, and then the NCA will correspond directly with the MLRO. You do not necessarily need to get more involved. The MLRO will tell you how much more you need to get involved. Okay? There are certain things that you need to have an awareness of, such as this idea of tipping off. You are not allowed to tell the client that you have made a disclosure or that you intend to make a disclosure. That is tipping them off that something has happened. We actually had a situation with a firm of accountants in the northeast of England where the NCA came along investigating a specific client, took away some client detailed files and such on a Monday morning. Client rang up the accountant Monday lunchtime, and the accountant says, "It's funny you're ringing today because the police were around this morning having a look at your files." That guy was obviously guilty of a tipping off offence. He had the maximum penalty applied to him because that client then just suddenly disappeared. And if they were performing some sort of illegal activity, we're never now going to find out. Some of the things that we do within our organisations to ensure compliance here will be to register with the ICAEW to ensure that we understand how the money laundering regulations can be applied, how they should be applied, have proper internal procedures and processes to make sure our staff understand what's going on. We have to train them. We have to appoint an MLRO who's effectively going to head up this type of issue. And we need to make sure that all of our internal procedures are set up in such a way that first and foremost, we can identify suspicious activities. If we do identify them, then we can make the requisite report to the NCA via the MLRO. If you were to do something particularly naughty here and you were to do it wrong, the worst case scenario is 14 years inside for the majority of the offences, such as actually laundering funds. That's probably not going to be us. Up to 5 years for failure to report, up to 5 years for tipping off as well. So that's a really nasty one. Be very, very careful here, please. And then up to 2 years for the organisation not having proper systems in place. To polish this chapter off, what we have is interactive question number 3. And interactive question number 3 looks specifically at money laundering issues. Orla, at the bottom of page 11, is a professional accountant working in a sole practice handling PAYE, pay-as-you-earn, compliance for various different companies. Orla has acquired knowledge that one client has received money from the sale of a large number of stolen goods. So there is very specific suspicion of issues here. It's actually a step further along than suspicion. Explain why a money laundering report may be needed. Identify to whom the report should be made and outline any consequences if she tells them what's going on. Well, she's got knowledge. It's not suspicion now, it's active knowledge that the client is actually doing something which is illegal, handling the proceeds of stolen goods. This is definitely going to be a money laundering offence as well as potentially a different type of criminal offence. Therefore, we need to make a report under the anti-money laundering regulations. This report will be a suspicious activity report, which will go through normally to the MLRO. However, Orla is a sole trader, because the question says she's a professional accountant working in a sole practice, so she's a sole trader. There's nobody else for her to report to, so she now has to report directly to the NCA. If she fails to submit a report when it's required, then that now potentially becomes an offence, which means that she could end up with an unlimited fine and potentially up to 5 years inside. So we need to make sure that she does make the requisite reporting, so she does perform an SAR and submit that to the NCA as soon as possible. Time can get a real issue here. If you delay submitting this type of report, that may now allow the criminal activity or the criminal persons to be able to disappear and the criminal activity to shift in direction. That is not good for us as a society. Okay, that brings us up very nicely to the end of chapter number 1. To make sure you're totally happy with everything that I'd like you to do, at the end of every single chapter, so the end of chapter number 1 included, there are some self-test questions. What I would like you to do next is have a read through those self-test questions, have a go at the multi-choice questions there, make sure you're totally happy with them. Once you are happy with them and you're happy with everything else within this chapter, go back to your online question bank, do chapter 1 questions for the online question bank. Anything you're not happy with, go back to your textbook, reread it again, make sure you're totally happy with all of that, and go through all of the chapters within this study manual. Once you've done all of that, then you can come back and do the exam kit questions, which is the second question bank you've got. Then you can start thinking about mock exams. Thank you very much for your time and attention. I'll see you all bright-eyed and bushy-tailed on chapter number 2.